What is going on, people? Welcome back to another video. Today's video is going to be slightly different. It's going to be like a university lecture kind of video. So if that's going to bore you, feel free to jump away and skip away right now. But if you're all here for the knowledge and learning about the industry, the world of banking and finance ahead of application season especially, then this video is going to be useful for you. For those of you that don't know me, my name's Afzal Hussein. I started my career at Goldman Sachs. I'm actually the author of Breaking into Banking, the essential guide to a career in finance. And the slides you're going to see in a minute, these slides, they're taken from my online community. So the book and the community will be linked in the video description below. So this video, we're essentially just going to go through the world of investment banking, high finance, sales and trading, asset management, etc. Particularly, this is going to be useful for any of you going into university in the next month or so, or first, second, third year students who want to learn about the industry but don't really know much about it. So with that, let's get straight into it. Alright, so what is investment banking? Investment banking consists of lots of different areas, right? Oftentimes you're going to hear that people say investment banking. That can refer to a specific division, like the investment banking division, or it can refer to, an investment bank, a global investment bank, which has lots of different divisions. It's got the investment banking division, the people that are working extremely long hours. It's got the sales and trading division, like, Wolf of Wall Street, trading floors, hedge funds, etc. You see the traders. It's got the asset management business. It's got the research business, lots of different areas. But these three areas, or let's go through them one by one. Financial advisory. So investment banks provide strategic financial advice to corporations, governments, blah blah blah. Essentially, so the investment banking division, or the financial advisory or corporate financial advisory business, is there to kind of, how can I explain it? Governments, large companies, small companies, pension funds, all of these large corporations and businesses, governments, etc. They need financial advice. They're experts in their own businesses, right? So Apple is an expert in making phones. Samsung is an expert in making telephones. Nike is an expert in making sports goods. All these companies, they're experts in their own industries, but they're not financial experts, right? And so when they need advice in terms of raising more money, in terms of acquiring a competitor, in terms of being strategically stronger in the industry, they go to investment bankers. So they go to investment bankers for financial advice. That's where financial advisory comes in. So anytime a company or a government is looking for financial advice, they go to investment bankers, right? And they cover a wide range of transactions. So investment bankers advise on a wide range of things. So mergers, when two companies merge together; acquisitions, when one company acquires another company; divestitures; and capital raises. So we can go into that later on in the slide. Capital market activities. So investment banks underwrite and distribute securities. So let's say you've got a private company. So a private company is one where you can't buy its shares. A public company is a company where you can buy its shares on the stock exchange. So let's say you've got a private company that wants to go public. And oftentimes companies want to go public because they want to raise money. So they go to an investment bank and say, help us sell pieces of our company to the public markets, so that in exchange we give them some of our company, they give us money. That way we raise capital. So investment banks underwrite. Underwriting means they take on the risk. So investment bankers will say, or the investment bank will say, all right, cool, we'll help you go public. So we will buy some of your stock at this price, and then we'll sell it to the public, or sell it in the public equity markets. And that's through a process called an initial public offering. So investment bankers help companies and governments raise money through the equity markets, so by selling pieces of the company, and by the debt markets. So debt markets are all about lending, debt. Think of mortgages, basically, debt products. So instead of selling pieces of the cake, selling equity, you're borrowing money, lending money. So there's a lot more interest involved, and it's a completely different market. Also, we've got the sales and trading business. So sales and trading is where, let's say, so we've just spoken about the investment banking division. That's where there's a lot of financial advisory services. There's capital being raised through the debt markets, equity markets. Sales and trading, or the trading floor, otherwise known as global markets, that's where, let's say I'm a trader or a salesperson. Let's say I'm a trader. I am responsible for making a market, so connecting buyers and sellers. Let's say, there's a buyer out there who is a multinational company, or a hedge fund who's interested in buying gold or some other financial instrument or security. As the middleman or middlewoman, I'm responsible for finding this person or this company someone that's selling what they're after. So if I can connect buyers and sellers, then I'm going to take a small fee, small transaction fee, small percent for making that market. And so that's what traders on the trading floor are doing at investment banks. Traders at hedge funds, for example, or proprietary traders are different. They're not market making. They're essentially taking views on the markets. They're betting that the price of this product is going to go up or down. And if they're right, they make money off of that. Whereas at investment banks, you're market making. You're just connecting buyers and sellers. You're looking, you're looking to make money from the spread, or taking a small fee from each transaction that you make happen. And this is important. So it's not just, stocks and bonds. There's commodities, you can trade currencies, interest rates. It's vast. So there's lots of stuff going on there. Next slide. All right. So key areas within investment banks. M&A, so mergers and acquisitions. This is where, let's say I'm a healthcare company, and I'm a huge healthcare company, but I'm struggling to implement AI into my business. But there's this startup who's just implemented AI, and it's really aligned with what I want to do and the vision I have for my healthcare company. I might go to an investment bank and ask them, we're interested in acquiring this startup. Do the research, figure out if it makes sense to do it. They'll do the research, and they'll present a report or a pitch book and some analysis, whether it makes sense for us to acquire that small company or that startup. Mergers is similar. Two companies might decide, we're going to struggle in the future, or it might make sense for us to merge with a competitor or someone in the industry, so they might merge. So that's where mergers and acquisitions comes in. Capital markets we've touched on, so essentially raising money through the debt and equity markets. Sales and trading we've touched on, that's all about market making. In sales and trading, there's traders, there's salespeople who are building relationships with clients. Anytime a client needs something, they call the salesperson. Salesperson talks to the trader, tries to get the work done for them, tries to get a market made for their clients. There's researchers, there's economists, there's strategists, there's structurers who are creating complex products that are specific to clients' needs. And then you've got asset management. So asset management essentially is, so the easiest way to explain it is, investment banking division is all about helping companies with financial advice and helping them raise money. Sales and trading is all about connecting buyers and sellers who want to trade financial markets. Buyers want to buy commodities, stocks, whatever it is. Sales and trading market comes and helps them. Asset management is all about investing money. So all the clients that we've talked about, they're going to have tons of money just sitting around, or that they want to put to work. So this is where the asset management businesses come in. They have, their clients are pension schemes, governments, large corporations, other investment banks, basically big institutional investors. And all these investors, they've got lots of money that needs to be invested in the markets to reach a return. They need to get a return either to just combat inflation, or, if I'm putting money into a pension pot, I need that pension pot to grow, so when I retire I have money to live off, right? Asset managers are responsible for investing such capital for pension schemes. Insurance, we all got insurance on our cars, right? So if you have a crash, you're going to need to get paid out, or your insurance is going to take care of you. So insurance companies need to manage that risk. So they've got tons of money from your monthly premiums that you give them. They've got tons of money, and they give that to asset managers to invest over a long-term time horizon, in line with the risk profile and the payout profile of insurance companies. So asset managers are basically managing and investing large sums of money for large clients in order to either maintain or keep that value of the money, or grow it over a long period of time. How they make money is they charge a fee. So if they're managing $100 million, they might charge 0.1%. So it's very small, but in the grand scheme, the sums are huge. So they make lots of money. Also, for the more riskier stuff, the more alternative products, so alternatives like hedge funds, venture capital, private equity investments, there's a performance-based fee as well. So there's not just a management fee, there's a performance fee. So if an asset manager hits a certain percentage of return over a year, then anything above that, they can participate in taking the profits as well. So it incentivizes them to knock the lights out, or to perform well, basically. Next slide. Okay. Mergers and acquisitions. Investment bankers play a crucial role in guiding companies through the complex process of M&A. They leverage their expertise to identify strategic targets, blah, blah, blah. All right, so if you're an investment banker, when it comes to M&A transactions, as you get more senior, you're going to have built relationships with different players in the industry. You're going to have relationships with different companies in the industry that you're focused on, and this is why your network is very important. So let's say you're covering a company, or a CEO, and they're talking to you about, they're interested in merging or acquiring, or they're interested in doing something. That's where you're going to have to use your investment banker expertise to do all of these things. So you're going to try and identify strategic targets. So as an analyst, you're going to do research. If a healthcare or a tech company is looking to buy another tech company, you're going to go as an analyst or an associate and do market research. What other tech companies are out there in the space that can be potential targets for this to happen? What makes sense? So there's tons of, just think about it, the amount of research that you're going to need to do to come to a short list of 5 or 10, and then present that to your team, or you work with your seniors to identify potential targets. It takes a lot of work. You're going to structure deals. Is it better to acquire a company with debt or equity? Is it better to, there's lots of things to focus on or think about when it comes to the deal structure. And then within the debt structure, I forget the term, but essentially there's different layers of debt, right? Within the debt hierarchy, there's mezzanine, there's high yield, etc. There's just tons of different layers, and it's a lot more risky at one level, and it's a lot safer on another level. So you need to become an expert and identify what makes sense for that company specifically. You need to make sure the company is going to be using you as a banker as their main point of contact. So you need to make sure they feel comfortable. You need to be switched on day and night. This is why long hours come in, and you can never really switch off. If they need you, you need to respond. Otherwise, the last thing you want is for a deal to fall through, and then your bonus just goes out the window. Due diligence. So this is important. Due diligence is basically another term for in-depth research. So if, let's say, you're advising a company on acquiring another company, you need to make sure you're making the right advice, or you're giving the right advice. You're positioning the company, the best company for the other company the best company in the interest of the other company to acquire. So you need to do some in-depth due diligence. You need to do some research. Then you need to be good at financial modeling, because you need to create a valuation. You need to put in all the company's data, information, accounting, look at the accounting statements, etc. Put it into your financial model and project. Obviously, it's not perfect science, but you need to project. Does it make sense based on the future cash flows or the future growth trajectory, or based on its costs right now, how it's going to play out in the future? Does it make sense to put this company forward as a recommendation to one of your clients? So there's lots of due diligence that goes on behind the scenes. You need to analyze financial data, assess the risks. Is AI going to disrupt this market? Is AI, if this company acquires this company, is it going to be positive and beneficial over the next 5 or 10 years? Or is it going to be disrupted by the growth in AI or whatever is going on in the world right now? So that's where commercial awareness and having a well-rounded worldview comes into play. Driving synergies. Synergies is basically, you see this a lot, it's a buzzword. Synergies are basically so 1 + 1 is 2, we know that. Good synergies make 1 + 1 = 3. So when two companies come together, or when two people work together, is the result ridiculously positive compared to the standard? So are there similarities that make sense for two parties to work together? Investment bankers play a pivotal role in identifying and quantifying the potential synergies or benefits between merging companies. This allows them to unlock value, streamline operations, cut costs. This is big in private equity. You find companies go acquire them, strip out a lot of the employees and the systems, make it more operationally efficient, and then sell it off at a profit later on. All right, next slide. Conscious, it's already 15 minutes and we are not even anywhere near the end. Might have to do a part 2. Let me know in the comments if this is useful for you. I don't know how many people are going to watch this, who's going to find it useful, but I realized on the whole YouTube thing, like, this is just easier for me, it's quicker. It doesn't mean I need to set up a camera and record all of that. This is just straight on my desktop, using Loom, using the slides from Finance Fast Track, and just talking to you. And it helps me educate, and I like teaching. And so this is my way of kind of being a university lecturer, to help people just broaden their knowledge. So capital markets and underwriting. So equity capital markets, this is the financial markets that involve stocks and shares. So equity is kind of like a slice of a cake. If I have a company, or let's say Apple, right? I haven't got an Apple phone, I've got a Google Pixel, but let's say Apple, you can buy shares in Apple. You would do that through the equity capital markets, right? Debt capital markets, if I want to invest in interest rates or bonds, etc., that's done through the debt capital markets. So investment banks play a critical role in helping companies access public markets. So let's say, for example, all right, Elon Musk, he wanted to buy Twitter at one point, right? And so he went to investment banks, he went to Goldman's or whoever it was. And then the key question is, right, this guy, he wants to buy Twitter for $44 billion. How do we finance this? Do we go to the equity capital markets, or do we go to the debt capital markets? Which is more efficient for his current financial situation? Now, a lot of you might be thinking, all right, this guy's a billionaire, why does he need to raise money? We could do a whole video on that, but essentially he's not going to use his own cash, because that cash could be used to generate other returns or grow in value, right? So it's better for him to either go and take out some debt, use some of his existing equity from Tesla, his Tesla stock, and then find a balance between the two. So, and there's pros and cons between the two. Like equity, raising money through the equity markets means, you're giving up ownership and you're getting money, but it means versus the debt capital markets, you don't need to pay interest. If you raise money through the debt capital markets, typically you're going to have to pay interest, so there's a fee or a cost on top of that. So finding that fine balance, or that mix, or the perfect mix, is what the investment bankers have to do. They need to figure out, all right, should we fund this transaction or deal with debt or equity? And then if you go into investment banking, there's you can join the equity capital markets team or the debt capital markets team. If you will find it useful for me to do a breakdown of the two, pros and cons, all of that, let me know in the comments and I'll do that. All right, next slide. Sales and trading. So if you're in sales and trading, what can you expect to do? Market analysis. So within sales and trading, you're going to cover a specific asset class. You might work in equities, you might work in fixed income, currencies and commodities. Within those, there's different subcategories. There might be emerging markets, there might be, there's lots of different things basically. And so let's say you're an emerging markets debt trader or emerging markets commodities trader. You're going to need to do market analysis. You need to know what's going on in your market. In any career, you want to be an expert on what you're covering, right? And so you need to analyze market trends, evaluate investment opportunities, and essentially leverage your financial knowledge of these instruments to come up with profitable trading strategies. So then you can make markets efficiently for your customers or your clients, right? Client relationships, this is very important. If you're a salesperson, it's important to have strong client relationships. If you don't have strong client relationships with potential customers or clients, you're not going to get business. Your traders are going to be pissed off at you because you're not bringing in any business, and then you're going to get fired. So being in sales, there's a lot of pressure as well. Execution and risk management. So if you can't break into a front office role, asset management, sales and trading, investment banking, etc., a lot of people go for risk management, middle office, front office, operations, back office. They work closely with these front office divisions, the traders, the investors, etc. So it's always a good backup option. Or a safety net, or they're interesting careers as well in there. Don't just be focused on what everyone else is chasing. Execution, you want to make sure you're executing efficiently. If you're too slow to react as a trader, you're going to lose the best price to the next best trader, right? So execution speed is very important. Sales and trading professionals execute complex financial transactions efficiently. They leverage advanced trading platforms. There's a lot of automated and in the quant space, algorithmic trading where it's faster than humans. So now it's getting even more tougher to find pricing discrepancies and benefit, because the algorithmic traders or the machines are just doing it 10 times faster. So that's something worth researching on if you're interested in trading. Specializations. So equities trading focuses on buying and selling stocks. All right, we know that. Analyzing company performance, market trends, blah, blah, blah. Fixed income, currencies and commodities encompasses bonds, currencies, commodities, managing interest rate risk, currency. So this is not another. So fixed income, currencies and commodities, mainly deal with the debt markets. They're the biggest markets in the world, more than the equity markets, and they come with their own challenges. If you're going to go into fixed income, currencies and commodities, you need to know a bit more about what's going on in the financial markets in terms of central bank announcements, interest rate fluctuations, inflation, all of that kind of stuff, those macroeconomic stuff. On the equity side, all those things do impact equities and companies, but I would personally say they're both very technical, but fixed income, currencies and commodities tend to be more, I don't want to say more technical because the equities people will get pissed off, but maybe, in my opinion, more complex. Yeah. All right. I got 7 minutes until I've got a finance fast track group call with everyone. So I'm going to do maybe 2 more minutes or so and then jump on a call. Finance fast track, if you don't know, is basically a community that I run, and I'm basically in there helping you break into the industry. So yeah, check it out, link below. It is paid, but think of it like this: you'll pay a monthly fee that costs you less than a pound or two a day, and you can get a 50 to 80,000 pound job. Anyway, I don't want to hard sell it too much to you. I want to carry on with these slides. So asset management. So in asset management, important thing to know, there's typically 2 routes. You can go down the sales route, be a salesperson, client relationship manager. That's the route I was going down. Or you could be a portfolio manager. So portfolio management is all about investing. So you start off as a product specialist. So you'll be an analyst who covers a specific product. Let's say you're covering, I don't know, emerging markets, and you are going to be an expert in that. So any requests for an emerging markets portfolio comes to you, you deal with it, you create the slides, the Excel models, etc. And as you get more senior and senior, you become a junior portfolio manager. On the sales route, you're basically helping the salespeople, so you're a client relationship manager. As you get more senior and senior, you become a salesperson. You start going out and pitching to clients, winning business, bringing in business. When business comes in, the money goes and gets invested according to the interests and objectives and goals of the clients. It gets invested, and the professionals on the investing side, the portfolio managers, they're responsible for investing it accordingly to the goals and objectives of the clients. Now in asset management, there's lots of different products. There's lots of different portfolios or funds. There's equity products, there's fixed income products, there's multi-asset products, so on and so forth. And so if you want to go down the investing route, my advice to you is figure out which asset class you're interested in. That's very important, because if you can specify an asset class that you're interested in, don't be too niche. Go equities or fixed income, and then know the different layers within. Large cap, mid cap, healthcare, tech, whatever. In equities, in fixed income, emerging markets, credit, high yield, etc. The more you know, the more impressive it is in interviews. If you're going down the sales route, just know you need to think about what the employees are thinking about. So they're going to be thinking about their clients. So make sure you know the different clients of asset managers. They're going to be thinking about, how do market moves impact their clients' investments. If you know their clients are pension schemes, insurance companies, etc., make sure you know a bit about the regulations in the industry impacting these firms, so on and so forth. So that's a bit about asset management. All right. I need to bounce. Private wealth management. Quick thing here. Private wealth, interchangeable with private banking. They are slightly different, but they're kind of the same thing. Private banking is, managing the finances of high net worth and ultra high net worth individuals. And asset management, and private wealth management is a holistic management of high net worth and ultra high net worth individuals and their families. So private banking, you're just doing the finances. Private wealth, you're managing their finances. Real estate planning, inheritance planning when people pass away, trust funds, all of that, you're managing all of that. Key thing with asset management and private banking or private wealth, the key distinction between the two is they're essentially the same business. You're managing money for clients. However, the difference is In asset management, your clients are institutional investors, corporations, governments, etc. In private wealth management or private banking, your clients are individuals, high net worth individuals, or ultra high net worth individuals, or family offices, rich, wealthy families, oil tycoons, businessmen and women, sports people, celebrities, etc. I'm going to pause it here. That's 25 minutes in. I'm going to pause it here. What's the next slide? Reset. All right, we've got tons of stuff to go through. All right, so I'm going to have to continue this in a part 2. Let me know if this is interesting and useful for you. I'm hoping if it is, I can do. There's so many different slides, materials, hundreds inside Finance Fast Track. So I'll just start working my way through them and sharing the knowledge out here. If you want to join Finance Fast Track, there's 4 calls every week with me to help you break into the industry. Tons of resources, everything you need. Basically, I want to help you break in, and I want to make it easy to do so. And there's a guarantee. Check it out. It's linked in the description. Recently launched, I became an author. So breaking into banking, this book will teach you everything you need to break into the industry. Anyway, I'm going to do part 2 in a bit. So I'll see you then. Hopefully you enjoyed this. Peace.